big week for tech. NASDAQ 100 hitting all-time highs. Nvidia pushing above $4 trillion in market cap, first company ever to reach that level. And some on Wall Street are now questioning Apple CEO Tim Cook's leadership. Let's talk about it all with Plexo Capital founding managing partner and CNBC contributor Toney. It's been a long time. Good to see you. Happy Friday.
Good to see you, John.
So I want to try to wrap all of this together in a way because so much of this narrative is AI driven about Apple being behind. Of course, Nvidia is king with its chips, but I think back 20 plus years to the rise of the internet when everybody thought they knew who was winning. Back then, you were at eBay, and eBay had the better business model, right? Because it was so profitable versus Amazon building all these warehouses. But the internet evolved. Might AI be similar?
I think it's very possible. What's really interesting is to think about that evolution in the context of we didn't really understand how big the internet was going to be. And I think, we might be underestimating how big this AI shift is going to be. We tend to, I think, if you go back and look at history, often with these platform shifts, we tend to, not only to your point, underestimate the ability for incumbents or entrants to battle and who's going to win, but also how big these markets are ultimately going to be.
So help us break down how investors should think about maybe who's winning, but also how to factor in the way AI develops, particularly when it comes to Apple. It seems to me Apple's this vertically integrated company. Not only do they have the devices and the software on them, but they're designing chips and then the AirPods and like all these things. If they incorporate AI, a version of it, they have to then design chips that enhance the rollout of that. They can't afford to get this wrong. So how far are they behind? How should investors think about that versus how careful they have to be to get it right?
Well, for some historical context, if we go back and think about that transition from Jobs to Cook, one of the things that was very evident, and who knows, maybe it was in Jobs' mind, was that there was going to be a period where the ability to be able to focus on achieving scale for the iPhone was going to be massively important. So if you look at Tim Cook and what he brings to the table, it's operational excellence. That played a really important role in being able to optimize the supply chains globally to be able to meet the production for this insatiable demand from the consumers. And it also played to Tim Cook's strengths when it came to being able to keep that same level of margins at that massive scale, which is very, very difficult to do. So he was the right CEO, hands down, for that period of, a decade plus, to be able to achieve that extraordinary growth. I will say, though, the key question moving forward is, has Apple become a company that's just focused on incremental product gains, number one? And number two, the most visible area where Apple seems to be behind is AI. And to your point, Apple has been the hallmark of what it means to be a vertically integrated company, owning everything from the hardware itself to the software. And that's been a hallmark of Apple. It plays into its ability to be able to have this really seamless experience where everything just works. It's almost like it's magic, as Jobs used to say. And it also plays into their ability to kind of maintain this privacy piece as well. And it's really, Apple as a company has really been lagging. So I think the analysts are looking at Apple and thinking, do they need new leadership for this next level, for this new platform change to integrate AI in the way that Apple is known to do?
So in light of that, whether it's in the public markets or whether it's in the private markets, when we talk about this so-called AI arms race, are the companies that are investing heavily, even if they're doing so, at the sacrifice of profits, at least right now in the near term, are those the ones that are getting rewarded the most? And if so, is that the right way to be viewing it?
It goes back to the point around, we're, I think, still really early innings within this race. To use a baseball analogy, maybe we're in the first, maybe the second inning. And so I think it's really hard to tell. What investors really want to focus in on is who has early traction, and then where do those folks sit within the AI stack? Are they at the infrastructure layer, which is where Nvidia plays an important role? Are they at the model layer? You hear about OpenAI, you hear about Anthropic. And then are they at the application layer? And so, some folks are crossing all of those planes, But for the moment, everyone wants to see who has traction, and then more importantly, who's actually gaining revenue. Because companies, enterprises in particular, are spending. Consumers lagging a little bit, but everyone wants to know that traction and how it equates to revenues, and then thinking ahead how things are going to play out. I think one of the things that Nvidia has done really well is to create this ecosystem of over 30 million developers that are using their software to be able to optimize different layers of the stack, most notably the hardware layer. But that ecosystem creates a massive moat with very high switching costs. And so when you start to think about, let's just use the hardware layer because everyone likes to look at Nvidia and the chips. Yes, there will be new competitors, but boy, the ability to create the ecosystem to match Nvidia is tough.